All right, hey, what's going on, friends? This is Dan Keller, your mortgage advisor at Guild Mortgage. I want to welcome you to another episode of Making Sense of the Markets. Today is Saturday morning, January 27th, episode number 4. Now, this is going to be, in my prediction, my most impactful episode of the year. There's no doubt, if you followed me over the last year or over the last few months, that I've tried to keep you up to speed in regards to the market and what mortgage rates are doing. And over the last 4 to 5 weeks, we have seen mortgage rates increase. I believe it's a trend that we're going to see through 2018. Every economist that I follow, mortgage professionals that I follow, believe that will be the trend. So what I wanted to do today is I wanted to give you some clarity in regards to the true cost of rising interest rates. You see, I think most people in the Seattle area and nationwide are focusing on the cost of rising home values. What they're not factoring in is the true cost of home ownership over time, the true cost of waiting while factoring in rising interest rates. And I'm going to give you this example. So I want to frame this. I want to tee this up for you. So for you as a consumer or you as a real estate professional, half of my audience is real estate agents, half of my audience is past clients and current clients and people on social media. But I want to frame just exactly what 0.25% in interest rate means to you as a consumer. So if rates go up 0.25% on about a $500,000 purchase, it will impact your monthly payment by about $72 a month. Taking it a step further, it will impact your buying power. So if your budget is $500,000 and interest rates go up 0.25%, it will impact your buying power by $15,000 of home value per 0.25%. Now, I tell you that because I want to give you a story. I do about 1 to 2 homebuyer classes a month, and in December, I hosted a homebuyer event, and some people came out to it. They had no intentions. In fact, the form that they filled out said that they were purchasing in the next 12 to 18 months. They came to the class. They were educated, they were informed. I presented a total cost analysis. It's the software that I use from Mortgage Coach, where I break down the true cost of home ownership from a down payment and a monthly standpoint. But I also factored in rising home values, and I factored in predicted rising interest rates. It caught their attention. They came to the class understanding that home values were continuing to go up. That's why they wanted to purchase this year before they got priced out of the market. But what they didn't consider was the rising interest rate factor. Once we talked about that, they came in and they sat down with me. We penciled out some numbers. They went and spoke with their landlord, and today, end of January, they're under contract on a home. Basically, what these people will be saving over the next 10 years is over $86,000 in fees and interest paid by making the decision to get into the market now. So what I've done is I've given you a link to this report, the true cost of homeownership with factoring in rising interest rates and appreciation here in the Seattle area. If you're a real estate agent, share this with your clients. If you're a consumer, take a look at this report and maybe factor yourself into this scenario, into this equation. Reach out to me. What I want you to do is reach out to me. Let's sit down and let's sketch out some options. Let me provide some clarity around your options to help you make a smart financial decision. These are crazy times. Most people don't understand where interest rates will be this year. I am predicting, from my professional opinion, from research and some of the economists that I follow, rates will be in the upper 5s to low 4s by the end of this year. I hope this information was valuable. Reach out to me if you have any questions, and I look forward to coming back to you next week. Have a great weekend. Bye for now.